Well, we've been talking about Jobs Day and economic recovery. Of course, one of the areas of the economy that has been mostly hot, we've seen a little bit of choppiness in the numbers the past few months, has been construction. PPG, big part of that, coatings, sealants, paints company. Tim Knavish is joining us now. He's PPG's executive vice president. Tim, it's great to see you. Thanks for being here. You know, since we've been talking so much about jobs, I actually would like to start there. We have been hearing from some segments of the economy that they're having trouble finding people to fill positions. And so I'm wondering what growth you guys are planning on the jobs front and whether you're also having that challenge.
Yes, good morning. Thanks for having me. Yes, we're absolutely having that challenge in our factories, in our distribution centers, and just as importantly, our customers. Painting contractors are having some of those same challenges. So it's great that things are recovering, and look forward to employment recovering as well, so that we can get past this and move on as an economy.
Tim, there's a lot of people out there looking for jobs, but what you do at PPG, it's a very specialized thing. You know, is there a way that you're thinking about retraining workers to get them into your business?
Yeah, we're confident in our ability to train, just about any skilled, semi-skilled applicant to either make paint, deliver paint, or tint paint in our world. So we're confident that when we get qualified applicants, we can pretty quickly get them skilled up. Now, when you get to things like formulators, PhD chemists, that's a different story. But also, we've got a pretty robust onboarding and training process. So we're confident that when we get good applicants, we can onboard them quickly.
You know, Tim, I'm reminded in this conversation of something that my colleague Brian Sazi wrote about, which is a chlorine shortage coming into the summer. And it made me think of all the specialty ingredients in the kinds of materials that you guys are putting together that are in short supply or have found themselves in short supply. What is your supply chain like today? Do you have everything that you need to go into the products that you're eventually selling out into the market?
Yeah, it's a great point. Look, we'd like to have more of our key raw materials, which are largely chemicals. And there have been some select shortages over the past months, partly because of robust demand and lower inventory levels, but also the great Texas freeze really hampered supply chains in the chemical industry. So we're recovering from that. We see it as a very kind of transitory event, but in the short term, we're juggling a lot of planning and schedules to keep our customers supplied as the upstream commodity chemical space has been tight.
And Tim, let's talk about the demand side of the equation too. As I mentioned, coming into this, construction numbers, housing numbers generally have been strong. We know a lot of people are redoing their homes or buying new ones. Do you see your sales as a forward-looking indicator, sort of a commensurate indicator of what's going on in the housing market? And what are you seeing right now in terms of demand that would inform that?
Sure. We're seeing robust demand. Our quarter one results were very strong. And as we move through Q2 and into the rest of the year, we see a lot of pent-up demand. You mentioned home sales. We love existing home sales because a lot of times the seller will paint the home, a buyer will buy a home and not like the colors that they picked, so they'll repaint it. So we get two paints out of that. We're very happy with that. Of course, the pent-up demand for new home construction and apartment construction. So all of those require architectural coatings from ourselves and others. So we're robust. We look for a robust second half of this year. And then outside of construction, the recovery in our general industrial segments, the recovery in our automotive business, the recovery in our automotive aftermarket business also points to robust demand. And our most severely impacted business throughout the pandemic was, of course, our aerospace business. But as you saw on the news, and if you traveled personally last weekend, Memorial Day weekend, you saw a lot of much more crowded airports. So we even see that business pointing to positive recovery as we move through the second half of this year.
And Tim, are you a little bit less enthusiastic on the impact to your company on a potential infrastructure package? I talked to your CEO, Michael McGarry, a couple months ago for our infrastructure special here, and we were looking at a plan over $2 trillion. Now it might be $1 trillion.
No, look, we're very bullish on the impact for PPG. at any of those numbers, because frankly, where a lot of that spending will end up going are places where we're active: roads, highways, bridges, construction, airports. We're well represented in all of those segments. So all of the numbers that you hear across the bipartisan discussions, we'd be very, very bullish for the impact on PPG.
Tim, thanks for coming by. Good to talk to you this morning. Tim Knavish is an executive vice president at PPG. Thanks.